Assem, thanks very much for joining us. A lot of focus at the moment on debt financing. What are you seeing, I suppose, in terms of some of the differences between this crisis and the sort of previous crisis, obviously, around the Lehman crash?
The most significant difference is the equity in the market. Banking finance is probably much less leverage on the asset than it was before Lehman. Also, the equity ratios within the bank balance sheet is probably higher. So the banking sector today is much more resilient to the crisis than it was before Lehman.
And in terms of overall funding costs, what are you seeing and what do you expect to see?
What I would expect, putting aside the question of rising interest rates, the spreads, the margin that we will ask in future funding will probably be more expensive for the simple fact that we have to factor in the economic environment. There will be more risk-weighted assets eaten up by downgrades because of deterioration of market values, and thus we will need to sell our assets more expensively, and that will result into rising margins.
Obviously, one of the other key trends is ESG at the moment. Mm-hmm. Do you think in a way that this is going to be positive for that transformation because it will, I guess, force the market to relook at that and look at refinancing in general?
Yeah, I think the transitional risk we're already before all the rising interest rates, rising inflation was also already one of the major challenges in real estate. Today, I think anybody who asks himself, do I want to invest into deleveraging or into ESG? I think those are two valid strategies. In many cases, the ESG strategy, meaning increasing the value through investing into the ESG characteristics of the asset, will probably be the more sustainable solution in order to face the challenges.
Also, just in terms of the senior side, obviously more resilient, where do you see stress coming through in terms of, I suppose, breach of covenant and those sides of things? Are there elements of the market that are going to be more susceptible to that?
I would suppose that the mezz market will be a bit under stress. For the senior market, I think, LTV breaches, we will see LTV breaches definitely. But again, the banking sector has the resilience to face those kind of elements through accompanying the client with the existing cash flow. Because we do have to remember, if we talk about LTV breaches, it does not mean that we have less cash flow at our disposal. So we can work with that.
Great. Really interesting to catch up on these markets. Thanks very much, Assem.
Thank you, Richard.